Ladies and gentlemen, welcome to the ICISA Surety Week. I can't believe we're already in the 6th of our 8 webinars of this week. Time really flies when you're having fun. Now, we're happy to have received over 3,500 registrations, and that's good because the goal of this Surety Week is to bring enriching topics to your screen to the benefit of all stakeholders of the industry. And that means insurers, regulators, officials, the press, brokers, servicers, reinsurers, and of course, our clients. Our webinar of yesterday morning on the geopolitical trends and the effect on the surety market was a general interest topic. Other webinars, like the one you are going to see now on the Italian and Latin American surety markets, are much closer to home. You'll have the opportunity to ask questions, and you can do so by pressing the button on the right bottom hand of the lower right-hand side of your screen. Just a pointer, we will record the session as we do with every session, and you will be able to access all the sessions from the ICISA website, icisa.org, under resources. So tell your friends, tell your family, tell your colleagues, they can watch again. Now, I'm happy to introduce our speakers of today, starting with Patrizio. And Patrizio Gabriel started his career in the legal sector. After graduating at law, he was hired as an associate in the Italian office of an important American law firm, with focus on financial law, corporate law, capital market, listing procedures, and mergers and acquisitions. He advised Italian and multinational companies on cross-border and domestic transactions. After a few years, he decided to leave consultancy and join a company. With his legal and financial background, he moved into a financial company. That seems to make perfect sense, right? And from there, the step to surety is a pretty short one and a logical one. Patrizio joined the surety industry almost 20 years ago and focused both on domestic and on international business for national and international insurers. He is currently underwriting manager in Liberty Mutual Surety in Italy. Juan Jose Montes joins us today, representing not only his company and market, but also the Pan American Surety Association, PASA. PASA is a kindred organization to ICISA, with an emphasis on surety and trade credit in Latin America. Juan Jose holds a degree in law from Alcalá, I'm sorry if I'm pronouncing this incorrectly, Alcalá Henares University, and an MBA in insurance from ICIEA. 30 years of experience, first in Mapfre Cassioni Credito, and then with Mapfre Global Risk as head of surety. He is currently Global Director of Solunion Surety and Guarantee and Chairman of the PASA Credit Committee, Surety Committee, I should say. My name is Richard Wolf, the Executive Director of ICISA, the global organization representing largely private insurance companies, sureties, and the reinsurers. Now, the goal of this afternoon is to introduce you to some surety markets that you might not be intimately familiar with. It's a well-known fact that surety is very much a national product due to differences in law, market practice, and market expectations. That, however, does not mean we cannot learn from other markets. I wouldn't go as far as Nelson DeMille, who said, plagiarism is the sincerest form of flattery. We do not need to copy in order to come up with good ideas, and that's what this item is all about. So without further ado, Patrizio, I invite you to deliver your presentation.
Well, thank you very much, Richard, for your kind introduction, and I'd like to thank ICISA for having me as a speaker. It's a pleasure to give my perspective on the Italian surety market, as always, and more in general, to be part of the promotion of surety bonds as a product. I'll do my best to not put anyone to sleep with my presentation. So without further ado, let's start the slides. So, okay, perfect. Well, To start, please allow me a few academic words on history, honestly, more for my own amusement, because I would like to talk about the Italian glorious past. I'm sure everyone is familiar with many Latin terms used in legal terminology, and some of them can be considered the roots of modern legal definitions. For example, sponsio, fideicommissio, and fideiusio were the basis of the modern personal securities. In particular, the fideiusio shaped the main features of today's suretyship. In Italy, insurance surety bonds are still called polizze fiduciarie these days. It's worthy to point out that in those times, at the beginning of the Roman Empire, a personal security was preferred to real security, and real security was employed as an alternative when a surety could not be found. Clearly now things work in opposite way, unfortunately. The modern history of Italian surety industry began immediately after the end of the Second World War in the Young Republic, when surety ships started to acquire the same legal value of other forms of guarantees in public contracts. In the following years, not only many changes defined the role of insurance companies issuing surety bonds, but also modified some of the features of the product. So let's move to the other one. All right, so let's see who can join the party. Italy is a member of the European Union, so under a regulatory standpoint, the insurance activity does not differ too much from other European countries. The issuance of surety bonds in Italy is allowed under three different regimes. The first one, insurance companies established in Italy under Italian corporate law that went through the authorization process with the Italian insurance regulator, which is called IVAS. Then we have Italian branches of insurance companies based in the European Economic Area, which includes the European Union countries plus Norway, Iceland, and Liechtenstein. This passport is called freedom of establishment. The last one, called freedom of services, is when an insurance company issues surety bonds directly from a country part of the European Economic Area without having a local branch in Italy. So, this slide is probably the most important as a representation of the Italian market. There are just a few numbers, but they identify the Italian market among many others. It's clear that the market is big, with more than 700 million in premium. Sometimes I hear that Italy is the second or the third market in the world, but it's very difficult to state a precise number. My feeling anyway is that Italy ranks among the first five. The premium volume could be even bigger than this, since such number is based on the premium disclosed by the sureties to the National Association of Insurance Companies, and several players acting within the freedom of service passport do not disclose the numbers. So, as you can see, 42 is the number of disclosing sureties. As I say, there are a few more active in the Italian market without mentioning occasional and one-shot operations. There is not a dominant category of surety provider in the market. We have domestic groups, international ones, we have generalist insurance companies, we have monoline or trade credit insurance companies. Also, in terms of size, you can see covered all the possible range. The market is highly fragmented. The first surety has a market share of 10.3%, and there are not big jumps in the chart. Now, in terms of distribution channel, here you can notice a different environment compared with most of the countries. First of all, intermediation is not mandatory by law, but having said that, the level of intermediation is extremely high with a strong prevalence of agents. However, this does not mean that 76% of the accounts are agents' clients, because a common scheme in Italy is having complex chains of intermediations where brokers partner with agents with a strong focus on this product. Lastly, you can see that the market is shared between banks and sureties, but it's just an estimate. It's very difficult to have reliable and precise data on the bank guarantees market. So now that we have seen how big the market is, let's talk about how it looks. Probably one of the key factors in the market is coming from the Italian legal framework. Italian laws and regulations require surety bonds and guarantees for many activities. For public works, to have certain licenses, to be compliant with environmental law, to be authorized by a governmental body, and so on. The reasons for which a guarantee is required are countless. And there is no discrimination between banks and insurance companies. Where a guarantee is required by law, banks and sureties are considered equal, with the exception of IPT on surety, 12.5%, unfortunately, I'm sorry. So, generally speaking, Italian regulations not only provide for the general content of the guarantee, but we also have mandatory bond wordings that are usually on demand. Please note that the Italian jurisprudence is starting to consider on-demand insurance bonds as unconditional and independent guarantees. It's interesting to know that independent guarantees are not typical in the Italian system because they do not conform to a standard form provided by law differently from fiducioni, which are well described in the Italian Civil Code. This is why interpretation of courts plays an important role in defining the product, and I would say that it adds also some uncertainty if you have a litigation, unfortunately. Another feature of the Italian market is the high technological content, which will be described later in the presentation. So let's put some number. Here we go. All right. Here are some numbers just to give a representation of the premium composition for different products. From here, it's clear that the biggest slice is related to public works or procurement bonds. Other types to mention are environmental bonds, housing bonds, customs bonds, tax refund bonds, but there are many others with smaller shares. So let's talk about public works and public procurement bonds. Firstly, the most important feature that differentiates the Italian framework from other markets is that the bond structure, the bond languages are exactly the same regardless of the fact that the underlying is a contract for works, for a supply, or for services. This has clearly a huge impact on the composition of contract bonds books in Italy. Construction companies are important, yes, but if we consider the premium outcome for these bonds, we can appreciate that what's considered as commercial bonds in other countries is probably prevalent in Italy. I'm talking about the pharmaceutical sector, IT services, facility management, energy, and many others. It's also important to point out that we are in a low penalty system where only a percentage of the contract amount has to be bonded. Within this category, we have the usual products: bid bonds, performance bonds, advance payments bonds, and warranty bonds. I will not enter into details of the complex legislation, which unfortunately changes every few years, making things complicated for everyone. But one thing that I want to point out, and which is also a challenge for underwriters, is the principle that the percentage of the performance bond is unknown at the time of the tender. The reason is quite simple. The percentage will depend on the discount offered in the tender. So the higher the discount, the higher will be the amount of the performance bond. Also, in Italy, we have some public contracts performed under a private-public partnership scheme or project financing, and those contracts have specific nuances, also in terms of bonding. It's very intuitive that the trend of this sector of the market is strongly linked to the expenditure policies of the Italian government and has cycles. In the last couple of years, and I think for the next 2 or 3, we'll see the strong impact of the post-pandemic recovery funds, but we'll see this later in the presentation. All right. So, VAT refund bonds. This type of bond is peculiar of the Italian fiscal system. And honestly, it's not easy to explain it to a foreign audience. These are not tax appeal bonds that we find in other markets, and we have them also in Italy, by the way. So according to the Italian VAT regulations, if a taxpayer is entitled to the refund of the VAT credit accrued during the fiscal year, in order to obtain the payment by the tax agency, it's necessary to wait until the end of the tax assessment period, which is 5 years. A way to get the payment in advance without waiting the full period is to file a bond covering the VAT credit plus interests. There are several industry types that have recurrent tax receivables due to their activity in accordance with fiscal regulations. For example, exporters, companies in the agri-food industry. I would add also foreign companies. By the way, this is the simplified explanation. Believe me, it's more complex than this. So, environmental bonds. I beg your pardon, but I will not describe all these bonds required by the complex environmental legislation that has many layers: European, national, regional, or even at province and municipality level. Here you can see the most frequent. I will spend more time on one specific type that in terms of volume represents an important part of the premium outcome in the market. All right, I'm talking about the transporter shipment of waste bonds. When a specific bond type, a specific type of waste cannot be disposed in Italy but must be delivered to a foreign landfill, the producer of the waste must arrange a shipment or many shipments through a procedure regulated by the Ministry of Environment. According to such regulation, a bond must be filed to guarantee the shipment until the waste is duly disposed in the destination landfill. So, due to the fact that the bond amount is calculated with a formula taking into account the tons of the material and the distance of the route, the final bond amount is extremely high, even for small value shipments. So if you consider that usually there are many shipments for one single procedure and many companies specialize only in this kind of activity, the facilities needed are huge, often in terms of hundreds of millions. Anyway, it's a bond type that can be seen also in other European countries, since it comes from European regulations. Another important part of the Italian surety market is the customs bond segment. The underlying obligations can be different on the basis of the customs regime for which the bond is issued, but more or less it's a product that has many similarities in all European countries. In the last few years, this product has been harmonized by European legislation. I want to mention that these bonds not only cover the payment of customs duty, but also can suspend the obligation of payment in case of goods that are temporarily imported in one country with the purpose to be re-exported without entering the local market. Furthermore, there is a particular product called Union Transit Bond, where the guarantor must have a correspondent in each country where the common transit procedure is applicable. The common transit procedure is used for the movement of goods between the European Union member states, the EFTA countries, which are Iceland, Norway, Liechtenstein, and Switzerland, plus Turkey, the Republic of North Macedonia, Serbia, and now, of course, the United Kingdom. So let's move to another bond type, housing bonds. This is interesting because we see housing bonds in many jurisdictions, but the content could be completely different. In some countries, we see completion obligations like the GFA in France. In others, the bond is filed by the buyer and not by the seller. In others, it's more similar to a performance bond. In Italy, we have a comprehensive legislation in protection of the buyer, defined as any natural person who is purchasing a property to be built. So, in accordance with this law, the seller must deliver to the buyer a guarantee covering all the advance payments, including payments in kind and VAT, collected before the transfer of the property. The bond must be delivered at the signature of the preliminary contract and covers all the future payments by the buyer. The wording is mandatory, and the bond expires when the property is transferred. Now, the interesting part. The delay in completion of the property is not a trigger event to call the bond. In this case, the buyer could ask for the resolution of the contract for breach. The trigger events are the cases of crisis of the seller, as defined by Italian law, bankruptcy procedure, seizure of the property. Anyway, it's clear that even if the delay in completion is not a trigger event for claiming the bond, it could cause a crisis for the seller sooner or later. So, all right, now we can talk about the technological innovation of the market. Since the market is a high volume market with a lot of standardized bond, the natural evolution went towards having efficient IT platforms. In addition to that, it's at least 10 years that the market is almost paperless. Italian legislation has been very clear in defining the requirements for electronic signatures to be considered strong and with a legal value similar to notarization. In Italy, we have the P7M format. But the market is even going beyond that. The latest public procurement law for the first time mentioned the blockchain technology, trying to push the player to use it. One of the reasons of this is the number of frauds and adulterated bonds that are discovered in the market every year. So, in order to improve the check on the validity of the bonds, the legislator wanted to facilitate the introduction of documents filed via blockchain technology. The way to do that is granting a discount on the bond amount to the companies using blockchain. In this way, there will be a competition push for using blockchain. The problem is that the legislator was not very granular in the regulation. So basically, he just mentioned the technology, but not how to use it, creating some confusion in the market. Blockchain is not a format like we have for electronic signatures. It's just a type of technology which could be used or implemented in many ways. So I think we'll see more the next few months, but the direction is very clear here. All right. Let's spend a few moments on the trends in the market. Here you can appreciate the steady growth of the market, with the exception of the year when the pandemic hit very hard Italy. But a 1% decrease is still a good number considering the impact the pandemic had on the GDP that year. The entire country was almost shut down for 3 months. And as you can see, after the pandemic, the implementation of recovery measures gave a boost to the surety market. So here you can see the size of those recovery plans, which impact in many sectors like energy transition, digitalization, mobility. So considering that the majority of those funds are becoming public contracts with underlying bond needs, you can imagine how the surety market is impacted. This creates also challenges because all these needs in a short period of time can create difficulties for some companies in finding enough capacity in the market, even a big market like Italy. In my opinion, we will continue to see that the market will overperform considering the GDP growth and inflation for the next 2 or 3 years. Clearly, not all the macroeconomic factors are playing a positive effect on the market. In Italy, in the same way of other countries, the rise of interest rates is having a negative impact on the private construction sector, which we can see in all the segments related to residential projects, first of all, housing bonds. However, I'm quite optimistic that we see very soon a recovery based on the messages we are seeing from European Central Bank and also the data on inflation. One topic I would like to touch is the cooperation with banks. In the last few years, we are noticing that banks are more willing, or maybe need, to share some exposure with sureties. They are looking for capital relief instruments, and if we consider the increased need of capacity due to the recovery funds and the fact that in Italy, very often sureties have better ratings than local banks, I will not be surprised to see more frequent interactions between banks and sureties. And also, we have to consider that there is the chance that in accordance with the new regulations, Basel IV, or even the future, banks will face higher capital requirements for common trade finance instruments like standby letters of credit and guarantees. This means that access to bank guarantees could be more difficult and probably more expensive in the future. And this will cause a shift of exposures from banks to sureties. And now some final remarks. So it's clear, at least for me, that the sureties in the market are evolving. And from a very standardized market where everything is based on the demand from the law, we are noticing more bespoke transactions. as mentioned, more cooperation and competition with banks, more complex deals. So moving from a strictly demand market to an approach where we need to explain the benefit of surety. Surety bonds must be seen as a way to generate liquidity, sometimes replacing banks in issuing guarantees. We need to emphasize that sureties play also a role in making projects more successful for owners. According to a recent Ernst & Young report, which I always like to mention, I have the feeling I'm not the first one doing this surety week, unbonded projects are up to 10 times more likely to default than bonded projects. Furthermore, surety bonding reduces contractor pricing by an average of 3.2% of project value. And what's even more important, in my opinion, the strong pre-qualification and review process that sureties do require are very important to reduce the number of defaults in such projects. So, thank you for your attention and ready for the questions.
Thank you so much, Patrizio. That was really interesting, and it was interesting for me because I truly do not know the Italian surety market, and therefore also perhaps my question. What is your opinion on cross-border transactions, and how are sureties dealing with those in the Italian market?
Oh, well, firstly, globalization is real. And another thing to consider in respect to the Italian market is that the economic tissue we have in Italy has a strong component of exporters. So having said that, I think there is quite a good expertise now in the market, but it's also important to point out that cross-border operations have a lot of challenges. There could be license issues, anti-money laundering issues, sanctions issues, and sometimes some creativity is needed. However, my opinion is that in the long run, this segment will have a greater margin of growth compared to domestic surety, which is a quite mature market, I would say. And also having more international sureties in the Italian market clearly gave some know-how that maybe 15 years ago was available only for just a few players. So definitely very good point.
But there's a promise, and that's always good to hear, right?
Yeah.
With that, let's move west. Shall we move to Latin America? And I'd like to invite Juan Jose on stage, please. And I would invite you to deliver your comments on the Latin American market.
Okay, thank you very much, Richard. Good afternoon, good morning to everybody. It's a pleasure to be here sharing these ideas about this interesting and amazing surety market in Latin America. First of all, when we talk about Latin America, maybe we have the temptation to think about some supranational organization, like when you talk about European Union or something like this. And this is not true. Latin America is the group of American countries, 20 American countries, where Romance languages are predominantly spoken, but it's not a legal framework, it's not a supranational organization about that. It's a very big area with more than 650 million inhabitants, GDP about 5 billion euros, dollars, American billions. Brazil and Mexico representing 60% of the GDP, almost 50% of population. You can find very big countries like Brazil and small one like Central America. But a common background I would like to remark is that all of them are amazing countries and with very, very nice people. If you have the luck to work in this area, you very rarely realize that. It's true that it's not a common legal framework, but it's true as well that you can find several trade agreements and institutions that trying to promote the relationship and the commercial interchanges between the countries. Mercosur probably is the most famous. It's a trade bloc between Brazil, Argentina, Uruguay, and Paraguay, with several countries like associated. CARICOM, that is an organization that is working in the Caribbean area. The system of Central America that works in this region, and the CAN, that is a free trade between Peru, Colombia, Ecuador, and Bolivia. So we are talking about many countries with different situations in each country, but it's true that you can find several multiple cultural, social, and economical common characteristics, many exchanges. And if you ask about my opinion, maybe still a lack of infrastructure, globally speaking, and room for improvement in terms of economic development and correction of inequality. So if we move specifically to the regarding the economy, and just to say something that could be important to understand the surety market, agro-food and commodities are still playing a very relevant role in these countries, in the economies of these countries, right? The surety market in Latin America, and if you look into the information provided by PASA and Latino Insurance, you can see that it's a really big market, right? In 2022, it was almost $2.6 billion market. Probably in 2023 will be close or over the 3 billions. And the biggest market is Mexico and Brazil. It depends a lot, as you know, depending on the currencies, because the rate change can change this figure. But of course, Brazil and Mexico are the biggest market. But Colombia, Argentina, Panama, or Chile are interesting and very big markets as well. The market has been profitable over the past years. Again, we are talking generally, so the difference between countries can be huge, but it's a profitable market with a net combined ratio about 70% in the media of the last 10 years, and it's a growing market. In the last past years has been growing sustainably in almost all the markets, with differences again. Okay, difficult to speak about the common ground without, because every country is different, but I try to share some thoughts that maybe are not always based in the statistic, but in the feeling or in my knowledge of the market and the experiences that I share with my colleagues. So maybe it's the main market in the world after USA. And probably is the main market, as I say, that I am pretty sure that is if you compare the percentage of premium with GDP. Europe, for instance, with a similar size of market, more or less, has a GDP 4 times bigger. So the penetration of surety in compared with the GDP, with the public investment is really huge. So I think that the role of surety in the region is really relevant. If you look into the top 10 of the markets, as Patricia explained before, Italy is around 700 million. You can see Mexico and Brazil around this figure too. And Colombia is a really big market too. So probably in the top 10 of the bigger world markets, you can find American countries, right? The number of players is huge. We have more than 400 companies. It's true that 40% concentrate. That the top 10 concentrates 40% of the premium, but you can find 400 companies, and without solid statistic to share with you, I will say that I think that the penetration of sureties compared to banks is huge. There are exceptions. Maybe in Peru or in Chile, you can find banks as more relevant players. But generally speaking, I think that the sureties are prominent compared to banks in the regions. Something that I am really surprised, or not surprised, but it's really impressive, is that the strong presence of specialized companies, regional or local, afianzadoras in Mexico or monorámicas in Argentina, that control a big mark of the market. But of course, you can find the multinationals as well, that represent 30% of the market. A thing that is remarkable as well is the high level of professional expertise in both sureties and brokers. It's a mainly broker-driven market, and when you meet the teams of the brokers, the specialized brokers in surety in Latin America, you can realize that are talking with very, very expert people in this industry. Talking about the underwriting procedures that are really strong and conducted with very professionalism, as I said, I think that it's very balanced between the solvency and the technical expertise. I say that because in Europe, or maybe, or at least in my experience, we put the focus in the solvency of the client and the financials, and the technical part that is important as well. Maybe it's not so important, but in Latin America, I see a very big degree of development of the analysis of the solvency of the client, but as well of the technical capacity, the project itself, with many solutions of fideicomisos or to control the advance payment bond. So really sophisticated underwriting approach, not just from the point of view of the client solvency, but from the point of view of the projects and the technical capacity as well. The market has been growing in the past years, so the dependence on the insurance is growing as well. So if you see the PASA figures, you can see that more and more the reinsurance are supporting the local companies. And again, it is next comments could be a little difficult to sustain because you can see the statistic, but I think this, generally speaking, Latin is a conditional market with exceptions. So, but probably the main part of the transaction are with wordings conditionals, and these are mainly traditional market from the point of view of the kind of bonds. You can find the big bonds, the performance of the advance payment bond, but maybe not very sophisticated products like the risk sharing with banks or solutions to cover almost financials operations like you can see in other markets. Okay, it's very important to try to define some common characteristics, but I think that the vision can be complete without the country peculiarities, right? So I'll try to remark some of them, or the ones that I think that are more remarkable, or that from people coming from Europe, it's maybe more different. The first of the list maybe should be Brazil, because in Brazil, almost the 70 or depends on the source, 75% of the market now is related to judicial bonds. This kind of bond is relatively new in the market, maybe in the past 20 or 15 years, or at least so strong. But now it's really a main part of the market. So probably if you want to be an active player in the Brazilian market, must be familiarized with this kind of bonds. Are mainly related to fiscal issues and with labor issues. Chile, a really interesting market as well. 10 years ago, in the surety market in Chile, the surety market conducted by surety companies was small. Bank guarantees was predominant in the market. In the last years, the market has been growing a lot. It's 4 times bigger than 10 years ago. But at the same time, the claim ratio has been growing as well. And to give only one reason for that is complicated, but maybe one of them is the situation we have in the market with on-demand bonds, where the companies try to compete against the bank. Banks offer these boletas bancarias a la vista or on demand. So if you want to be in the same, to play the same role that the banks, you need to offer similar product, but it's true that they are much more risky and is more complicated to be profitable with these kind of products. Mexico, the biggest market, a conditional market with excellent results. It's a really strongly regulated market with amazing professionals, companies, or really big level of IT development. The level of digitalization is really high. So I think it's a really interesting market. Something remarkable about Mexico is that several years ago, the regulator tried to introduce the seguro de caución, like an instrument different from fianzas, but after a few years, you can see that fianzas is still the most important instrument in the market, and it resists this try to change for the way of having the business in the market. In Panama, something that is interesting is the huge percentage of the bonds compared with the contract amount at the subrogation as way to resolve claims. It's more maybe in the way of the states that the beneficiary wants the project delivered and not an indemnification, right? Argentina, nice country with is always in the news, as you probably know, and that despite all the difficulties, despite all the economic situations that they are crossing, it remains a profitable and growing market. And Colombia probably is the most complicated market, at least to understand from my point of view. These specialties like the Póliza Única or with sometimes tough technical conditions, but several years of difficult situation now is again at the same level of premiums than 10 years ago, and this offering an acceptable technical result. In Ecuador, it's an on-demand market that is really big compared with the size of the economy. And I could be speaking about different markets, but I think that I have no time, so I try to resume the main peculiarities of the several markets. And the last slide is about challenges and opportunities. Sometimes it's difficult to say where are you talking about challenges or opportunities, because it depends on the point of view. But I think that definitely an opportunity is the need to continue developing infrastructure in terms of water, energy, roads, transportation. I think that the region need to be more strong in this kind of infrastructure. So I think that it will be big opportunities in the future to do business related with all these works. Talk about Latin America, you need to talk about political and economic instability. I think this is something that is not specific only for Latin America, and especially today we are seeing many issues in a lot of regions. But I think that is something that is a real thing, and something you need to be conscious that it will happen. Interesting to me is the balance between growth and ESG criteria. You know that especially in Europe, maybe the multinational players are more and more pushing these ESG criteria related to oil and gas, related to governance. Okay, depending on the country or depending on the role of the oil and gas in the economy or in the life of the countries, it could be not always easy to apply these criteria. I think that this lack of sophisticated solutions could be an opportunity in the future. Patricia was talking before about the resharing with banks. It's something that I don't see too often in Latin America. It's true that maybe that sureties are predominant there and don't need too much this solution, but at some point could be interesting to explore this way. Something that I think is remarkable too is that Europe in Latin, the projects that are active in Latin have been dealing with European and North American companies for a while, but in the last times we are seeing more and more Chinese construction companies, very big companies, but culturally different way of do the things. Not it's always easy to have the collaterals of the indemnity agreements in place and to be reliable about the real enforceability of them. So I think that talking with brokers, talking with colleagues, I think that is something that is not definitely a good resolve in these regions. And the last but not least, that is from my point of view, at least in the after this Lava Jato situation, we had several years ago. I think that now the level of transparency is increasing. So now maybe it's more safe and more open the market to do business without these issues that the corruption can create. So this is all from my side. Now I give the word again to Richard, and if you have questions or remarks, I'll be glad to try to resolve it.
Well, thank you so much, Juan Jose. And for the uneducated European like me, this was highly interesting because this market is really different than the markets that we're used to in Europe or in the US for that matter. Now, when I look at the Latin American markets, I see the beautiful combination of growth and good results. Now, we've of course asked you here because you've got a crystal ball. And I would like you to use your crystal ball to see if the brilliant results and the growth of the last couple of years will continue by and large in the next couple of years.
Mm-hmm. Yeah, difficult question. I hope yes, because I am a very active player with my company in Latin America. But I hope yes, but I think that there are reasons to support or to sustain this affirmation. If you look at the past, the stability has been always there, and the economies and the countries and the people, especially maybe the people, is very resilient. So I think that now that things are going better, because despite all the complicated situations, I think that globally speaking, the region is improving. I think that it will be continuing a very successful and profitable market. It will depend on the country, of course, but if I need to say yes or no, I think that yes, it will continue being an interesting and profitable market.
That's the best answer you can give, because we can use a little bit of optimism in our trade sector. So thank you very much for that. Patricio, if I can ask you to join the screen again, because there have been a couple of questions from the audience. First, Marcelo, you say, please, after the seminar, how's it possible to download these slides? If you go to apps in the bottom right-hand side of your screen, you see a menu choice called handouts. You can download the slides from there. You can do it now, you can do it after with the same link. So if we look for growth, Cindy asks, what Italian bond type or segment do you foresee as the largest area of growth in the next 1 to 2 years, Patrizio?
Well, as I said, I will see very good opportunities in everything that is private contracts, international trade, risk sharing with banks. So all the non-standard products. And there the market is, in Italy, is quite young compared with the standard products. So clearly there I see opportunities in the future.
Lovely. And there's another question for you from Yamilet. It might be a bit complicated, but you might want to keep it relatively brief. Could you please explain about the new IVASS regulation in surety in Italy, Patrizio?
Well, IVASS is the supervisor and regulator. There is no new regulation about surety. There is a new public procurement law that changed a bit the legal framework of bonding for public contracts. So it's going to be complicated. We need another hour at least. But I would try to summarize that there are changes, yes. But for now, we don't see a material impact on the public contract. So the tendency is to use the previous schemes, the previous approach. So nothing that is going to have in the short term material impact on the industry, I would say.
Thank you. And if you think this question was complicated, there's one from a gentleman called Benoit. And I think, Juan Jose, it's basically for you. How do you see the legal environment in Latin America evolving, and what is its impact going to be on the surety market? I'll give you the first shot, and Patrizio, you might want to comment from an Italian perspective afterwards.
Okay, and in this case, I think that is really complicated to have an answer, because talk about law is about talk about 20 different legislations. So I don't see any big issue right now, and we are dealing from time to time with some issues, like a couple of years ago with the prescription in Colombian market, or some tries to unfair calls in Panama. So we are dealing with different situations, but today I can't see anything really complicated in that we can foresee that's challenging or that can affect heavily to our industry.
Yeah.
You, Patrizio?
I'm echoing Juan because clearly legal environment is one of the biggest risk we have in our industry, because our product is highly regulated. So basically, a strong part of the demand comes from legal requirements. But given that in Italy there's quite a long history of surety bonds as a product, maybe 70 years, and there is, I think, quite a good awareness on the importance of the protection that can give surety to taxpayers, for example, because basically we are speaking about taxpayers' money. I don't expect to see dramatic changes, but from time to time we see something that could create a different approach to a product. For example, VAT bonds 10 years ago were more frequent. Now the legislation changed a bit, reducing the recourse of these bonds to get the payment from the tax agency. So there could be nuances, but I don't see really big challenges, at least right now.
Thank you so much. And looking at the clock, we're coming up to the hour. There are still a couple of questions that have gone unanswered, and gentlemen, I will put those questions to you if that's okay, and respond to you per email to the people who have put the questions to us. I just want to put one question to you, and that is, what would you say to sureties who would like to start new operations in your market? What would be the advice that you would give them?
I will start if you want one. My answer should be: Did you know that there are already 42 sureties in the Italian market?
I'm sorry?
Do you know that already 42 sureties in the Italian market? Would you like to be the 43rd?
That's clear. Thank you very much.
Okay, Latin America is very big, and maybe there are space for more people. I think that today we need two things. One of them is a powerful IT tool. Today, without a big level of digitalization, it's very complicated to control your risk and to provide an adequate level of services and professional expertise. You need people that know the local market and know the way that conduct the business. I think that with these two things, you can start doing business in the Latin American countries.
So, ladies and gentlemen in the audience, now you know. If you want to go to Italy, don't. If you want to go to Latin America, local knowledge. And that brings us to the end of this item in the Surety Week. And thank you so much, gentlemen. I trust the audience will join me in saying that this webinar has been enlightening. I hope it gave the people in the audience ideas on what you can do in your markets in order to innovate and remain attractive to clients, because that is, of course, what it's all about. Now, ladies and gentlemen in the audience, I thank you for your attention and your thoughtful questions. And as a reminder, you or anyone in your circle that is interested but couldn't make it will be able to review this past hour via our website, icisa.org. Tomorrow morning at 10 a.m., we'll be back to you with a panel discussing the so-called workout situations. So basically what we can do if a contractor or an obligor runs into a rough patch. Given the past, and we have been so spoiled by favorable economic circumstances and low insolvencies, but given that, the old hands might need a refresher, and those less experienced colleagues might want to profit from the experience that will be brought to your screen. If you have not registered, you can still do so on our website, icisa.org, and you see the pop-up now. For now, this is Richard Wolf signing off from Schiphol Airport in the Netherlands, and I hope to see you all soon. Thank you so much.
Thank you.